Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update, and then Shawn's going to go through some of the available earnings trades. And we'll review any questions you guys have from last week with the show. Also, if you guys have any. Just kind of a admin note. I put in the Google Drive those two documents that I completed, the new low spike, and then the where's the other one? I thought I put it in there. The new low spikes in there. I also completed the one second, this index stop losses. So I guess I didn't put that in there. I'll put it in right now. All right, so that's in there too. We'll go through that in the meeting here today. So overall, as far as the market, Russell's still in 8, got SPX and NASDAQ in state 4. SPX went up into stop losses, so that document I just shared with you should help shed some light on what happens in state 4 when it hits the stop loss. So overall, green pie actually hasn't grown since last week. It's actually dropped. So let's take a look at the market pulse here. So last week we were at 27.9. It's actually dropped with the market really jumped up there, but the bullish states have actually dropped from last week, from 27. Seems like we're trying to flatline here around 21, 22. We'll have to see about that. New lows, we had that huge spike on the 24th, dropped down, another huge spike on the 28th, and it's pretty much dropped down here near flatline level, 87.53. So, I don't think that's any indication. That's kind of a reaction to how the market's performed the last few days, the big jump. If we go back and look at the previous times where the market had these new low spikes above 1200, the next 3 months on average were extremely volatile, and we covered that last week. And this low area is usually retested within the next 2 to 3 months. So I think, kind of going forward based off of those charts that we showed last week, and I shared, they're in the share drive, the new lows spikes here. I think we can expect continued volatility going forward, and at least a retest of the lows, and of those previous times, 6 out of the 7 times they made new lows. The one time it didn't, it still retested. So, and that's within the couple month period. So we're still technically oversold on the bullish here. Anything below 30 is technically bullish. I mean, like a bullish sign for us. We're oversold. So we'll have to kind of see how this plays out. If we look at the state 1s and 8s, okay, mute some people. I hear background. Okay, I muted everyone, so if you want to talk, you have to unmute. 1s and 8s, we're down to 14. We've dropped from the previous, 18.5, so we're down around 15. Saw that big spike up, and we already covered the lows. So what I wanted to show, we'll go into the actual individual analysis here. I will show this in case people weren't here, the new low spikes. Did anyone go through this and kind of take a look for like a further analysis? Anyone?
I have not had time, but I'm planning to.
Yeah, okay. Anyone else? All right. So, this is basically like the spike here. The previous occurrences are all down below. So this is the low chart. This is the 1 and 8 chart. And then here's the bullish bearish chart, all with that date, where that initial new low spike over 1200 was. So it doesn't take into account any further spikes, just that initial one saying basically volatility, a little craziness is going to happen in the market. So, a lot of them made new lows, and we'll have to wait and see. But you can see none of this, we still had big jumps and then turn downs and jumps and down. And a lot of these, like jumps up, pretty good jumps. So expect volatility in general, going forward. And I think that kind of leads right into, the rate hike meeting in March for the Fed. I think the expectation right now is to at least raise rates, at least a quarter point. I think they're out there kind of testing messages about, 50%, a 50-point raise, and also talking about balance sheet. I heard one of the Feds talking, put out something about, decreasing the balance sheet. That would be pretty much like a double whammy. I don't think, I think that's kind of the bigger thing right now is the the balance sheet. Everyone's pretty much priced in, a couple of rate hikes this year. I think the key thing to watch is the 10-year, and when that gets over, kind of like a 2.5% in that area, things could get ugly overall for the market. Okay, so let's look at the modeling.
Hey, Josh.
Yeah. Lee.
Lee, before you get away from that on the Fed, if the 10-year gets to 2.5,
yeah,
just kind of like ballpark, knowing that you can't pin it down, but when would you think that might occur? Like, I don't know, August?
Well, it's hard to say. I think it's dependent on the balance sheet, So when they start shrinking the balance sheet, then those 10 years are going to be more susceptible to market forces rather than, the Fed being the bid on everything and keeping rates low. So once they start, letting assets run off, not buying new stuff, I think at that point it's, almost becoming like a free market on those 10 years. So, definitely I would say, anything right now, they're kind of jumping the gun, but they know they're going to stop purchases in March. So we're kind of getting in that zone where, they're not going to be buying any, 10 years, long-term, any government bonds, or at least that's what they say,
Right.
As of right now. So whether they do that or not, hard to say. I think they're still very flexible on how things are, they're going to be reactive. As far as the easing side, I think, they've been very late on reacting to inflation.
Right.
We talked for probably over a year. This is not transitory, and it hasn't been. But once, those government bonds are subject to actual market participants and not, the Fed buying everything, it could get a little crazy.
Yeah, just sharing a comment that I've heard about reducing the balance sheet, that they don't think the Fed will sell what's on their balance sheet. They think that they'll just let it expire. So as time goes by, everything they've purchased just expires, and that's how they get out of it. I don't know.
Yeah. Yeah, it's hard to say. I mean, the runoff, I think they're levered mostly a lot more short term than they were previously. So, it probably makes sense that they just let things run off and not, buy new stuff. But, they still haven't decided that. So I would anticipate that's like the base case is, balance sheet runoff, and they're just not buying new stuff.
Right.
Mhm.
Okay.
Yeah, this is David. Two quick comments there. I think that's one thing the Fed's a little less transparent on, is like what they're going to do with their balance sheet, rather than try to guide everybody into maybe anticipating rate hikes, interest rate hikes. But just for fun, and since this is a pretty smart group in my opinion, could in the chat, for those that want to play, just guessing at a number of rate hikes you think we might have in 2022. I'd be kind of curious to see what other people are thinking there. And we can do that while you're talking. But yeah, I think that balance sheet thing is going to be, we're not going to know until after the fact, not before the fact, like they're going to try to telegraph their rate hikes as well as they can. I don't think they're going to do that with a balance sheet. But yeah, I'd like to see what everybody thinks about the number of rate hikes this year. And just another interesting point was 2 meetings ago, I wasn't at the last meeting, but 2 meetings ago, just after the banks started reporting, we had VIX spike up to high 30s, I think, or high to mid 30s. Now it's back down around 20, where it's been sitting for quite a while. So, we're right into the thick of earnings right now. This is a high profile week pretty much. So it'd be interesting. We'll see a lot after this week to see what kind of groups are responding to what kind of earnings and what kind of guidance. So anyway, thanks. Thanks.
Okay. Yeah, thanks, Dave. It'd be interesting to see what the opinions are on number of rate hikes. I'd probably say 3.5. I'm kind of on fence between 3 and 4. Okay, so
Josh,
yeah, so there.
I just sent you an email with a link. There is which the group might be interested in, if you wouldn't mind showing it. There is on the CME site, there is actually I've read through it once, but I've forgotten a prediction of what traders think the Fed will do. And so what you're looking at, if you look at the top left corner, go up a little bit, they're saying for March 16th, which is the next Fed meeting, there's a 94% probability that the Fed funds rate will be 25 to 50 basis of 25 to 50, 0.25 to 0.5. Current target rate is 0 to 0.25. So what these futures traders, and this is usually very accurate, are saying, the Fed chair, whether it's Jerome Powell or Janet Yellen or Bernanke before that, they have what's called Fed speak. You know what I'm saying? They kind of, say they're going to do something, but they always hedge so they don't have to, and all this kind of stuff. So it's hard to read, well, are they really going to hike rates in March or are they not? But there's experienced Fed speak interpreters who on the CME give you a prediction, and they're saying 94% probability there's a quarter point hike, a 5 to 6%, 5.6% probability there's a 50 basis point hike in the March meeting. So this link might be interesting to people. I found it very accurate. So that now you're looking at the next Fed meeting, you know, they're saying another quarter point, 73% probability of another quarter point in May.
Yeah.
And I don't want to, you know, take over your meeting. You don't have to go through all the tabs, but people might be interested in this page because these are professionals who are predicting what the Fed is going to do.
Yeah, I put the link in chat for everyone so they can, definitely very interesting. I haven't seen that before. So
I look at it all, you know, regularly. And so, you know, there's all of these people on TV saying, well, did the Fed really mean they're going to hike? Are they going to do it? All that. Well, these are people actually betting the futures market, betting their money on it.
yeah,
Right. So to me, I've found this to be very accurate. And what they're saying is 94% possibility there's a quarter point hike in March, another quarter point in May. Now, anything can happen. You know, for example, there's a war threatening to break out in Ukraine. China, not as much in the news as China's threatening to go to war with Taiwan. So all this could change that's why they hedge. They go, well, you know, we're not so sure, we'll be data dependent, blah, blah. That's why they hedge. But barring major things like a war breaking out in the Ukraine or in China and Taiwan, I think we're going to have a quarter point hike in March.
yeah, that seems pretty much certain. You know, I think they tried to put some messaging out to test, you know, 50 point that as of right now, it's pretty much guaranteed, you know, at least a quarter point, right?
And so what you said before was accurate. I think the market, this is a public site, they can see this. The market is digesting this quarter point hike, and what they're wondering is about the tapering, how fast that's going to be, whether they just run things off and stuff like that, in addition to the quarter point hike. And so that's where, you know, that's the unknown, how fast they do the tapering. But I think at the very least, what they've said is they're just going to stop buying, and all the bonds that they buy, they'll allow to mature. I believe by law, all the interest they collect has to return back to the U.S. Treasury. So they'll just let these bonds mature and fall off their balance sheet, which would be, you know, the way they taper.
Right. Yeah, I kind of assume that's the base case. You know, I don't think a quarter point hike means anything really for the market. You know, faced with what, you know, 7% inflation or something. So, you know, it'll be a few hikes until we get into, I think, meaningful territory on, you know, the interest rates for them. So I'd kind of at least front end focus on asset purchases. And, you know, if they're going to start dumping treasuries, that'll be really bad. If they let it run off, then, you know, I think that's what everyone's expecting at this point.
Right.
Hey,
I thought this site might be interesting for people. So it's public, you know, you can look at it anytime. And
yeah,
and this is, of course, as you go further out in time, like you're now in December, obviously the predictions become less reliable. But I have found, you know, this to be very reliable for the next couple of meetings. You know what I'm saying? And March is not that far away. So, you know, the March prediction is, I think, pretty well locked in.
Yeah, very interesting.
Hey, Josh?
Yeah.
Do you think, and I would expect these quarter point increases But then as we get close to the midterms, I'm thinking some of the politicians won't be wanting to do that. Do you think that, I don't know how to say it, that the Fed is, I don't want to say politicized, but they'll respect that
Yeah,
position. And so stop raising rates as we get into that part of the year, whether that's August, September, October, whatever. And then try to pick up after the midterms.
mhm. Hard to say. I mean, right now I pulled up the November, I guess the most money's on a 1% rate. So that'd be 4 hikes.
Yeah.
So it's hard to say, politically how things will. I mean, last time they raised rates and they did it too fast, I know Trump was publicly going after them.
Right. Yeah.
So hard to say. I
And they
think-
backed off that also real quickly, didn't they? When the market started turning south.
Yeah. Oh, the market tanked. Yeah.
Yeah. That was
Yeah.
18, late 18.
Yes.
Okay. Okay.
But you can see as you get further out in time on this thing, notice the November one that you're showing, the highest probability is only 36%, whereas if you go to March, it's like 94%, so,
Right.
as you go further out in time on this, obviously there's differing opinions on whether they'll take the election into account or not, and, that sort of thing. So
Yeah.
it's not as easy to tell going further out.
Yeah. Obviously, as you go further out in time, it's harder and harder. But I think May is really telling you something there. Even, March is definitely a certain rate hike, and then this one, it's even, I mean, pretty strong. 3 out of 4 times, they're doing another rate hike in May. So then I think it starts falling off a little bit there, right?
Yeah.
Yeah.
Yeah, this is Dave. I wanted to comment to Lee's point about the midterms, et cetera. And also to Sudhir here on the Fed fund rate, I watched that too. And just for everybody's edification, they swing a lot. It's not like you can make a bet day on 3 meetings away. They'll swing between 5 and 3 rate hikes within 1 meeting. So the accuracy is dependent upon the closeness to the next meeting. I think March is the next meeting. I don't think they're 20 February. So that's why everybody expects the Fed to do something. That's why it's at 94% that they're going to do something, right?
Yeah.
But then to Lee's point, what are they going to do later? I think they're going to take a look and say, well, when we raise rates, what has been the impact on inflation? If they raise rates and there's no impact on inflation, well, that's one thing. Well, what if there is a rate impact on inflation? Then maybe they'll, increase or decrease. So I think that's why you will see the Fed kind of waiting and less rate hikes than most people are expecting now, because they need to wait to see what the impact of their actions are before they continue or adjust.
Right.
So as we get closer to the midterms, Lee, I think just watch to see how has the inflation picture changed with whatever rate hikes they do. So, I'd watch that.
Yeah, that's a good point. I think the next 2 meetings here are a couple months apart, so they'll probably they could possibly do a quarter here, and then you get another 2 months almost. Here, it's a month, so I don't think 25 basis point hikes going to do anything. So, in my opinion, as far as inflation and stuff like that, a lot of the drivers, oil, really, I mean, that affects so much throughout the economy, transportation, gazillion products come from petroleum. So, I mean, if they can get that under control better, that would definitely help with inflation. But, I've heard a lot of calls for $100 barrel, some even higher. So I think we're right around 89 or something right now. So that, if we can ease the oil, that would definitely help with inflation, I think.
I agree with you, Josh. I just think inflation, in my opinion, is still rising, and I can't see what's going to slow it down. So I think it's going to be rising. It's my guesstimate, and I agree. 25 basis points is nothing. I think that's factored in to the market at this point, and I think 50 is. I don't know. I don't know. We'll have to see. Anyway.
Yeah, well, I think they put out messaging on it a little bit, kind of test it. I don't think they want to surprise anyone. They usually don't.
Right.
Their main thing is messaging, what they're going to do. So most of these meetings shouldn't be a surprise. I think
Right.
the big unknown right now is the balance sheet. Because they're not going to do anything until March. They said they weren't, going to touch the balance sheet until, they started raising rates. So I wouldn't think anything's going to happen balance sheet wise in March. But I think they'll talk about it more.
Right. Right. All right. Thank you.
Yeah, great discussion. So I sent that link. You guys can use this now. I bookmarked it. Thank you, Sadir, as usual. So real quick, SPX State 4 hit our stop losses. So you can reference your index stop loss sheet in the share drive there. So in State 4, we've had 9 occurrences where it hit its stop loss in the past. 5 rebounds. So rebound means within a few days. So here's the stop loss. Within a few days, it turned lower than that close. So it's kind of like a 50-50, a little better. But, you can see here, none means that, okay, I just want to explain this. So a rebound would say, okay, it comes down lower than this price here, but never gets to a target. So that's what that means as far as none. And you can see it went all the way to T3 one time. It hit 1, 2, and 3 there. So most of the time, even if it does rebound, you're not going to get all the way down here before it changes states. So that's just kind of information. I thought, it's useful, I think, when things are hitting stop losses and things like that. So, a little better than a half chance it's going to turn back lower than this price, that 4515, but unlikely it'll get down to this target, before it moves out of 4. So let's look at the chart for SPX. So, I talked last week, we got below that 200-day MA, which is a kind of big deal. So we popped up above there. So this 50-day SMA is going to be pretty strong resistance. Obviously, that uptrend has been broken, through this huge move all the way down to 200. So that 50-day is going to be really strong resistance to the upside. And, this right here, the 200 will be support. We'll have to see if we can stay above that. But, based off of, the other charts we pulled up, as far as, when we had the huge spike in lows, you can expect, a lot of choppy movement, in the next few months. Let's look at the Russell. So the Russell's in state 8. This one's been weak. It's well below the channel that it did for, like a year. So this one is pretty much done like a typical move so far. Gone down to, resistance kind of came up. Typically we'd expect it to go like this. Somewhat on that trajectory. So, that's kind of like your base case of how state 8 performs. So I'd just be careful of, this thing, turning down in, the average move, which is about 10%. So in between 1893 and 1750, that's kind of the base case. And it's pretty much following that so far. So that's not, Russell's looking kind of bearish. This SPX not as much. But you can see, we had our channel here. We broke above it here with a nice head fake in November. Immediately got back in there, and now we had a big swoon well below, that 2100. So, that's going to be pretty strong resistance to the upside for Russell. So that's, like a key level to look at that. And I think that was about it. I'll open up, kind of run long here, open up to questions, comments.
Hey, Josh, Lee again.
Yeah,
Can-
Lee.
Can you show your graph up where it enter? Yeah, and when you draw your projections of how it typically goes,
Yeah.
and I need you to correct me on this. It just seems that all of them kind of follow that same pattern. They come in, they rise up, and either like really go up, which is not the usual, or they come back down, test some resistance, and then go back up. Is that generally kind of like true for most of the patterns when they enter, or are eights different than twos or ones?
No, I would kind of say the middle ones can be a little quirky, like 6 and 3, they don't happen much. You can see like 87 days here, 54, but
Yeah.
1, 2, 7, 8, that you can pretty much lay out the typical kind of patterns for those as like your base case. It's like, okay, resistance usually come up around here, support, and then go back down, and then that's it. Obviously, some of them can exceed 3 and keep going. Occasionally you'll have ones that just spike up once they get into that state. But the base case is this trajectory of run into resistance, find support, and go down for the final swoon.
Yeah. Okay. Okay.
Yeah. I mean, just think of it like the opposite of 1,
Right.
Yeah.
Right. Okay. Thank you.
Going down. So, okay. Anyone else? Great discussion, comments, and everything. All right. Well, I'll turn it over to Mr. Shawn. So thank you.
All right, I'm here. Thanks, Josh. Good job, and as similar to last week, good discussion from everyone as well. So we do appreciate getting the input and the insights from everyone. I think it helps to give a broad spectrum of what everybody's thinking that's on the call. So thanks, everyone. So I wanted to show you a couple of things. First and foremost, I'm working on getting some more of the detailed results for, the current earnings plan and kind of how everything's going. So once I have that complete, I'll be sharing that with everyone. So been kind of running through all the spreadsheets and, you know, having fun with that. Let me pull up my screen. I seem to always forget to do that. And what I'll do is, this is part of the bullish pre-runner plan that I have completed. So obviously, as we know, you know, over the past couple of weeks or even the past, you know, month since the beginning of the year, the market's been definitely, it seems like it's been going a little bit more down than up, but we did have that one big spike down on that Monday and that rally back intraday. So with the bullish pre-runners, what I wanted to show you is just a couple of trades that I have currently that are closed out. There are still a bunch of trades in the actual portfolio, you know, that are open. There's a bunch that are closed. And then I also have some here that essentially I have highlighted in green. Excuse me one second. The ones that I have highlighted in green for a specific reason. And the reason is those are trades that had come out, you know, within the pre-alerts for the bullish pre-runners, and they had come out as confirmed, you know, from the Delphian platform. So I'm tracking those, you know, trying to track those a little bit differently, tracking them all together, but track those a little bit differently so we can look to see confirmed versus estimated. But I did want to show you these 5. So these 5 were confirmed when the trades opened up, and they are currently closed. I do have one trade, or 2, excuse me, that are open, still open trades that have been confirmed as well, but these are the ones that are closed. So if we look on these real quick, we can kind of get a brief idea, you know, of what we're seeing here. We got a pretty good win percentage amongst these, 80% win rate, because we're looking at, we have 4 winners, 5 and 1 loser. And what does stand out to me is obviously the Netflix trade here. A substantial amount of risk on the Netflix trade, and obviously Netflix took a big drop down with the Qs, you know, over the past month. So we did get a big drop in Netflix, and therefore this position, you know, near max loss. It was near max loss, meaning it did drop below the lower strike, the 505, but it didn't take a max loss, obviously, because we did have, you know, more time on the trade for the trade to work out. So, you know, I'm hoping, you know, over the shorter term, I'm going to have all this analysis completed for you where I can give you a better, you know, insight on, you know, how many trades have come out thus far, which ones have been confirmed versus estimated, and just give you a better overall picture of the bullish pre-runner plan. But I did want to kind of give you this summation real quick of what I had seen. So these are the trades that are, you know, currently closed that we did come out as confirmed. Any questions on, you know, what I'm kind of displaying here?
I was surprised that 405 worked out given the downward market. So that's interesting.
Yeah. Yeah, and some of these were pretty quick too. You look at, you know, Intel and IBM, they happened pretty fast, right, within a couple of days. And these are some lower price stocks too. So it seems like, I mean, JP Morgan's 150, but yeah, I was a little bit surprised. You know, I think with the way the market's been pushing higher, pushing lower, you know, it'd be interesting to see the intraday, kind of those intraday moves and how they're reacting to the market, because you are getting some decent spikes, you know, in volatility. So that could obviously in turn increase or decrease the value of the options pretty substantially intraday. So it would be interesting to see, you know, how this is somewhat playing out. So
yeah, I think the stats this quarter will be very interesting. You know, if you have a high win rate, even in this environment, that says a lot about the earnings plan. I think I told you in previous calls that I'm taking a breather on the earnings plan on bullish trades and vol crush and non-movers. Because of my own personal bias on the market. I think the rates are rising, so I think we're headed downward. So I'm only taking the bearish pre-runner and bearish runners, the vol rise and the movers. So I didn't trade any of these. I wouldn't have ever traded Netflix anyway. It's way beyond my risk tolerance. But
right.
But you know, if these with this market, if at the end of the quarter, if they still show you know, good win rates and stuff, that'll be surprising to me, because of,
right.
That says a lot on the data if that is the case, because you know, I think we're going to be in a downward market until these rate hikes are fully digested.
Sure, yeah, and I don't have the full analysis completed, but I mean, you know, the latter part of that is more accurate, where, you know, the portfolio as a whole is down. Now, there's a lot of estimated trades in there, so I'm adding the estimated and the confirmed together and just trying to take them and just do the entire analysis. But as a whole, yeah, I mean, all the trades, the portfolio itself is losing money as a whole. And that's expected, I think, with this market environment, kind of what you're alluding to there as well, right? That, I think the win percentage is lower, obviously, and then the profitability of the actual portfolio is down as well. Some interesting aspects that we're trying to add in there is, that Monday when the market did make that big turnaround, what was the value of the portfolio previous to that? What was the value after? Is that when we started seeing the actual return percentage or profitability, or not profitability, but the return percentage of the portfolio increase? And if so, how much? So there's some really cool analysis to do there. And I'm adding it all in the virtual portfolio together because I can come in, I can download it as an Excel like I have here. And then I can actually, after I download it as the Excel, then I can do some sorting and some pretty cool manipulation like that to where we can see, try to compare apples to apples in that way and see what it would do. So, but yeah, I wanted to show you guys that just to give you a quick look at it. Like I said, it's not all complete, so I'm hoping to have it done sooner than later, but it is a lot of data, a lot of information. So, once I get that done, I'll share that with the group. So. Yeah, and then, after that, so the virtual portfolio, I'm tracking all the trades in the virtual portfolio for everyone and, for myself to look at and for us to do further analysis on. But what I did want to show you is one trade that's coming out, tonight for earnings tomorrow morning, a trade so here that you're not really interested in, but I kind of had it pre-planned to talk about it prior to you saying that. I think there were a couple vol rise trades coming out as well. So I think like Zillow, and there maybe is another one that's coming, or that maybe came out this morning as a vol rise. So the Uber, right? So Uber came out.
I took both of those trades this morning.
Good,
I took the two vol rise trades. I didn't take the bullet. There were, I think, 3 bullish runners and 2 vol rise, and I think we're in a high volatility market. So I took the 2 vol rise trades.
Good. Now, are you comparing the vol rise on those trades to what comes out on the Sunday email, like where the volatility is for the, the 1-year range, or are you looking at that?
Well, I look at the Sunday email. I don't do a comparison between that when the daily alert comes out. But I did take those 2 trades this morning.
Good. Okay, good. Yeah, I'm tracking those as well, and obviously those 2 stocks can be some pretty decent movers in my opinion. I think, with Zillow, we know a lot that's going on, or some people know a lot that's going on with Zillow buying homes in different markets, trying to cut the real estate agent, I think, out of there. I don't know what they're doing with the homes after they buy it, but I know they are trying to come into a bunch of different areas and purchase homes. So it's an interesting way that they're actually using that cash. So that could be pretty volatile, obviously being tied to that specific sector of the market as well. And then Uber also with everything that's going on. So I think those are 2 interesting stocks to be in based on some volatility. So, but the one that I did want to show you was Merck. So there's a couple interesting ones that have been coming along with the non-movers and with the vol crushes, and we've talked about it, in months or quarters previous, and we talked about getting that 2-to-1 reward to risk ratio when you're getting a credit versus the amount of risk you're taking on with some of those butterfly trades. So there's been a couple. I think there's a couple yesterday, and then Merck is one that actually stands out. So what I want to do is just show you Merck as a non-mover and get your thoughts on it. So let me show you the Merck. Let me see where I'm at. So wait 1 second. So for Merck, where are we at? So here's the earnings plan. So when I pull up the earnings plan for the Q4, I can type in the symbol in Merck, for Merck, and it comes up here. So non-mover today, they have earnings coming out tomorrow morning, before market opens. So that's why you'd want to get into the trade today. And again, as we've talked about it before, you can click on the link here. It pulls up the actual specifics. So non-movers, iron butterfly, talking about 30% profit on the actual credit that you receive. And then you can actually click on this to show you some actually specific details of how you would set up the strike selection model, based on the price of the stock where it is prior to the close today. So, so what I did pull up first too was I did pull up the actual share drive. So the data that we put together whenever, we actually ran the analysis on all the earnings trades, and highlighted in yellow here, you can see, so this is the non-mover list, And then highlighted in yellow is the result for Merck. So we can see, Merck, and then if we keep looking over a little bit, expect to move 5.172. And then we're talking about, the profit factor, 90% win rate over the past 10 quarters. So a really good win rate over the past 10 quarters. But what I really looked at today too was I went in there and I put in the trade and tried to get some analysis real quick to see, what the entire spread was going for if I wanted to do the spread or wanted to do the trade at this particular time. And then, lucky enough, Merck is currently trading right at 82 bucks. So, if I constructed the trade as we have it, what we're looking at is we're basically looking at selling, the February 11th $82 call, selling the February 11th $82 put. And then we're going 3 strikes out. So we're basically looking at the $85 call and then the $79 put. And we're collecting a credit. Currently right now, the trade's going for about 211. So give or take a little bit just based on all 4 legs, but total credit of 211, total spread risk, you got $3 in spread risk. So total spread risk is 3. So if you're taking 300 bucks minus 211, you're talking about a total risk of $89, not including your commissions and things like that. But, this is, in my mind, what I'm looking for as an optimal type trade when we've talked about those iron butterflies before, because, I'm getting a little bit better than a 2-to-1 reward to risk. So, and what I mean by that is my credit is at least 2 times or more than actually my total risk on the trade. So, we've talked about these in the past, and, these seem to be setting up pretty nicely. And, in my opinion, these are the type of trades that you want to get into when you're looking at the iron butterflies, because you're able to do, a handful of these trades where you're getting that 2-to-1. And, over time, if you're 50% right, you should be making money on the trade. But it's going to depend on the credit. And, you're looking to get 30% of that credit to exit the trade. But these are definitely the setups that we're looking for, are these 2-to-1s. And like I said, there was a couple yesterday that had come out, and this one stood out for me today. So I wanted to share that with you guys, based on that. So based on the setup, and then obviously based on the risk to reward on this trade as well. So all of that looked really good for this Merck trade for the non-mover. So please track it. If you're not trading it, just go in there and track it. And I want to see how you guys, what you think about that actual trade. I know this is one of the trades that many people don't do, but again, that's what that virtual portfolio is in there for. So, any questions on the Merck trade? Fair enough. And then that does remind me of
Wait,
one
Shawn.
point that I.
Shawn,
Oh, yeah, go
this is Winslow. I thought you said that Merck was going to expected move 5 points, and you're only going out $3, 82 to 79 or 82 to 85. So this
Right.
thing's gonna go beyond it, right? Is that what you want?
Well, that's a perfect question, right? So the expected move up here, so in column E, this expected move is a couple of different variables go into there, right? So when we create this report, that you see here, back in, I think, the middle of December. So the expected move middle of December versus now, can be a little bit different, should be a little bit different. And then the other big factor too is this expected move here, the way that Delphian has that set up is this expected move is based off of the monthly options. So the monthly options that are expiring on the 18th, and we're actually doing the trade based on the options that expire next week, which is the 11th. I wouldn't expect it to be, $3 versus $5, but it is going to be a little bit different. And with these trades too, typically what you're wanting to do is that expected move, that you're getting out of those trades are going to be the value of the at the money options, which is the value of these 2 options right here. So when I put those options, when I put this trade like in my little scanner to look at it, I see what the value of those 2 options are, the $82 call and the $82 put. I add those together, and then that's what gives me the actual wings or how far out I should go for that risk. That is the expected move that you're seeing on the value of the option. So roughly right now, the 82 is like 150 at 156. The 82 put. So let's just say 155, if you will. And then the $82 call is 147 at 152. So let's just say 150. So we're talking about, about 305 or so, give or take a couple dollars.
Okay, I see. It was the dates.
Does that make sense? Yeah. And that's, yeah, it definitely is, you know, I'm hoping in the future we can get this to be, you know, not static, to where we can somehow maybe update that expected move to give a better inclination. Again, this sheet here is static, so it's been in there since February, and it does run off those monthly options, so it's going to be a little bit different.
Okay, thank you.
Oh yeah, no worries. But good point, because I noticed that as I was reading it, and I was like, all right, that's a good one. So it's a perfect question. And then, you know, I did want to mention too, when Sahir was talking about not trading the bullish, you know, pre-runners earlier, that brought me to, you know, I thought of a great point that I wanted to talk about, was that I think is the perfect example of why you should use, you know, the virtual portfolio in Delphian, or a virtual portfolio anywhere. And that is because if you do like, you know, the bullish pre-runners, or you do like the bullish runners, you know, as a group, or the studies, and you like those trades as a whole, but you really feel that something's coming into the market, I think that's a great time, in my opinion, to go in there and track different trades that you like. If you're not really trading them, maybe track them in a virtual portfolio, or track them on an Excel spreadsheet, so you can see how, you know, the trades are going to react with the market. And then if your portfolio is down 20%, or if your portfolio is down 30% based on that trade type, you know, how do you feel emotionally? How do you feel? And does that hurt, you know, better than it makes you feel in the end of making money on some other trades? And if it does, then you might want to evaluate how you would react in that particular position if you were actually trading live money. Because, you know, obviously you don't want to take those emotions into your trading. A lot of people do, but being able to handle those emotions properly is key. And that's where those virtual portfolios, you know, really can help you out. They can help you see what's going to cause, you know, these emotions to come out, and how you would react to them. And sometimes without even actually putting your money at risk. And then you can use that to formulate a plan to how you would trade in the future. So great points here. And, you know, like I said, I wanted to bring that up. I totally kind of slipped my mind, but, you know, I think it just shows you, you know, wow, my portfolio, you know, started with 50,000. I'm down, you know, 25%. You know, how would I react to that? You know, would that make, you know, a big impact on me emotionally? Would I not trade the next trade because that's where I'm at? And if so, then maybe your risk is too high, or maybe you need to reevaluate what you're doing. But it's a perfect learning tool, in my opinion. So please use it. Any other questions, guys, on the Merck trade, or, you know, the vol rise trades, or the bullish pre-runner trades, or anything open to the earnings? All right, well, that's all I had really. But again, you know, I just want to reiterate that I like using that virtual portfolio tool, you know, for these earnings trades, because it does that, exactly that thing. It just kind of tells me, like, how would I react if this is happening with this position? You know, I'm in Sahir's boat. I wouldn't be trading Netflix because the risk doesn't match, you know, my personal portfolio. But, you know, how would I feel holding that position, right? Would I be able to hold a position like that? Or, you know, and if I'm down so much money, would I want to hold it through earnings? How would I react to all these different scenarios setting up? And that's what that virtual portfolio gives you access to, is how would you react? Is there any adjustments that I can make? And if so, how does that adjustment affect, you know, the position or the entire portfolio? And just all these different cool little scenarios that you can dive into. So good deal, guys. Well, I appreciate you taking the time to listen to me on the earnings stuff, as always. And, you know, again, thanks, Josh, for offering the market commentary. And I appreciate everybody, you know, giving their insight on the Fed as well. I think it's some great advice we can take here. Everybody knows that inflation is real. So, you know, let's see what happens over the next couple months and year. Thanks, Josh. Thanks, everyone.
Yeah, thanks, Shawn. That's very, very informative. Appreciate it. And, you know, thank you all. We really appreciate you guys tuning in each week, and, you know, the great comments and discussion we have. So we'll do it again next week. So until then, thank you all.
Thank you. Good meeting.
Thank you.
Thanks, everybody.
Thanks, everyone.